Markets entered a period of extreme volatility at the beginning of last month after President Trump announced expansive tariffs on allies and adversaries alike. In the 2 days that followed the so-called Liberation Day on April 2nd, the S&P 500 fell by over 10%. By the end of the following week, that amounted to $10 trillion in losses globally. But there were bright spots, among them ETFs. The week after the announcement, ETFs saw net inflows of more than $35 billion.
We had about 4 of our 5 highest trade days in our history in the past 6 or 8 weeks. In every case, clients were buying rather than selling. And in each of those cases, they were going back to these original principles of diversification, staying aligned with your goals, and investing for the long term.
Salim Ramji is the CEO of Vanguard, which has been battle-testing its approach to investing for half a century.
So some of it just comes from kind of our clients' behaviors, and as you said, whether we're attracting clients who like what we stand for. In many cases, it's they're exposed to individual securities, and they're seeing the risk and volatility in owning individual names, and they're looking for a much more diversified set of exposures. But the biggest part of clients' portfolios are often individual securities. And so there's a lot of money coming in from clients who want more diversification than they might get from owning individual stocks and bonds.
In the 50 years since Jack Bogle founded the company, Vanguard has seen 6 recessions in the U.S., including the dot-com bubble, the GFC, and more recently, the COVID-19 recession.
Let me give a shout out to Vanguard. They created indexing for the individual investor.
David Booth has been part of the evolution of indexing since day one. He was around for the early days, working with pioneer Eugene Fama.
We were all kind of friendly and, worked with each other to the point that the group I worked on at Wells Fargo, which was one of the first, came out with one of the first passive funds, first index funds. Jack had created the framework for providing indexing to individuals.
Bogle was the legendary founder of Vanguard, who went against what was then the investing grain.
How to decide on the funds is a little bit difficult. I'd say taking the most important part, perhaps the equity fund selection. I think a beginning investor in particular should go for sort of middle-of-the-road funds like fairly conservative growth and income funds or growth funds, and even, as suggested by your remarks at the outset, maybe a little seasoning of index funds wouldn't be so bad.
Described you as an industry statesman.
When Bogle appeared on Wall Street Week with Louis Rukeyser in the early 90s, Vanguard had around $100 billion in assets under management. Today, it's grown to more than $10 trillion. And through the growth, Bogle's philosophy remains.
Well, you have a really interesting job because, you have to thread staying true to the roots that Jack Bogle laid down 50 years ago, but also positioning Vanguard for the future and, future-proofing Vanguard.
Yeah, I think first is understanding our history and understanding our culture. And I've also benefited that first, Bogle wrote a lot. And so not just in his books, but in all the historical archives and speeches and in the memos and the like.
He was a quote machine.
One of Bogle's famous sayings tells the story of passive investing. Don't look for the needle in the haystack, just buy the haystack. It's a philosophy so popular, it generated an online following of passive investors known as Bogleheads.
One of the interesting things is Vanguard's always changed. Like, we've maintained our sense of consistency around our purpose. Whether you can think about our moves into advice, or moves into ETFs, or moves into, if you go back into the 90s, or moves into retirement. These were all changes in the business model. But so I sort of look at what I'm here to do is to continue that tradition and that kind of duality between staying true to the purpose and also changing things as we need to change and adapt based on our client needs.
Buying that haystack today looks a little different than it did during Bogle's days. But Vanguard makes no apology for sticking to its tried and true approach to indexing that avoids the trends of the day.
You could start to have to really think about how do you stay true to the roots while also, giving clients what they want. Because those clients, specifically in advice and wealth management, I could imagine them requesting private assets, which I know that Vanguard is pursuing, but I could also see them asking for Bitcoin and crypto, which famously Vanguard isn't too hot on. So I wonder how you're thinking about those sort of potential run-ins.
We're not going to be everything to everybody, and that's okay with us. That's been true for kind of the history of the firm. But where we see opportunities to partner with others, including in things like private markets, and we think it's good for clients' long-term portfolios, we'll absolutely do it.
So it sounds like that's a no. Like if a client came to you and said, I really want to add Bitcoin, or I really like the looks of this leveraged single stock ETF. It sounds like that's not a road that Vanguard is going to go down.
Yeah, we're always going to be focused on what we think is a good way to build long-term wealth, and that is suited to the client's individual needs. And so that may mean saying no, or saying that we don't think that particular product and that particular offering is right for the client. And we may not get caught up in the latest fad, but we're dependable for the long term.
Your comparative advantage is not going home at night and trying to think of the next big winner. Your comparative advantage is going home, figuring out, here's my circumstance. I just decided to retire, or I won the lottery, or whatever the changes are. How does that impact the way I want to invest? That makes a lot of sense. And spend the rest of your time playing with the kids. That's kind of a side benefit of all of this. You can come up with sensible investment solutions that have a great chance of winning over the long haul without getting just emotionally fixated on it.
Vanguard is known for making diversification easier for investors through indexing, but also making it cheap. In February, it announced its 2,000th and largest ever fee reduction, cutting its average asset-weighted expense ratio to just 7 basis points. That compares to the industry average of 44 basis points.
We're always investing back into technology and into capabilities that enhance our economies of scale. It's true in our investment team, it's true across the firm, because there are lots of advances, as you can imagine, that are just making investing kind of easier, making it more efficient, and we need to be at the forefront of that. Back in February, we announced kind of record fee reductions, but it was the 2,000th time we'd done that, right? So it was a very Vanguard kind of oriented thing. And when we think about kind of the future, we just see so many opportunities to extend the Vanguard effect, whether it's in fixed income, whether it's in things like cash, whether it's in things like advice.
Its competitors have been forced to keep up with the race to the bottom in the fee war, or to find other ways to differentiate themselves.
It's one thing to say, look, I have slightly higher fees, but that only works if what really counts is what your return is. And we now have 43 years of performance that's showing that this kind of approach can work.
Over its 50 years, Vanguard has changed investment management, but it has also evolved to meet investors' appetite for new products and services.
In mid-April, Blackstone came out and said that it had teamed up with you and Wellington to build investment combinations with stocks, bonds, and alts, which is interesting. Private markets have been the talk of the town for months now, and it seems like every issuer is trying to figure out how to incorporate that into their strategies. Why go that direction?
Well, going the partnership route was, if I will, a very Vanguard thing to do. The first Vanguard funds 50 years ago were managed by Wellington. And it was actually Jean Hines over at Wellington, the CEO. She came with this idea around, could we partner with another firm that does private markets as well as Wellington does fundamental equities, as well as we do things like index and active fixed income. And this idea of going the partnership route was, as I said, something that we've done for 50 years now. We have plenty of other active equity managers. Wellington is our longest standing and largest. But when we started to think about how do we branch into private assets on behalf of our clients, it was really that Wellington came up with the kind of the idea and the proposal. And that was really the beginnings of, I think, what you've heard about.
ETFs are meant to diversify risk and make investing safer for retail investors, but indexing might be creating another kind of risk.
It's got the point now with ETFs that they've kind of created this giant investment casino. Here's how you can place your bets. You've got all these indices, you can put some money over here in time. Because the question often comes up is, well, if everybody indexes, won't markets become inefficient? And so now people, instead of picking stocks, they place their bets on indices. I mean, I hope, and I think that's unfortunate, because now you're back into the same soup that you were in before, which is, in order to in order to beat the market, you've got to pick the right indices at the right time.
The growth in ETFs has brought with it competition for mainstays, like Vanguard.
Which competitor do you think about the most, and why is it BlackRock?
The competitor I think about the most is friction. The biggest impediment, I think, to clients achieving the kind of investment success that we would hope for is that investing is still too complicated. And there are ways that we're always looking for to how do you make it easier? How do you make it easier to open an account, to fund an account?
10 years from now, when it's Vanguard's 60th anniversary and we're sitting here again, what do you want to have accomplished?
Vanguard plays a really unique role in the investment community because of our client ownership, because of our focus on giving people a fair deal. And I certainly don't want that to change in 10 years. I don't want that to change in 20 years or 30 years or well into the future.